Okay, it's 11 o'clock. We may as well get going. So our guest this week is Craig Baker from Willis Towers Watson. He's going to talk to us about Alliance Trust. But before we get to that, I've got a couple of bits of news to look at. So Doric Nimrod Air Two is coming to the end of its life, and Harmony Energy Income, which may not be far off. So Doric Nimrod Air Two first. That is the whole chart, more or less, from when it started. Actually, no, it goes back a little bit before that, but you can see it used to trade at big premium. Everything was going quite well, and then it got hit by COVID, and I'll explain a bit more what happened there. And it went out to trade at a big discount, but that's come back in again now. And you see there's a little blip here at the end. This is related to the news that happened this week. So it was launched in 2011, and it raised a decent chunk of money because it was the second one of these. Obviously, this one is called Doric Nimrod Air 2. Second one needs to get going. So Doric Nimrod Air 1 came to the end of its life relatively recently. The basic setup of these things is they were aircraft leasing funds set up to buy A380s and lease those to Emirates. That was the basic structure of them. So it started off by buying 3 of them, and it was paying $234 million a piece for them at the time, most of that financed by debt. And then on the back of that, it was comfortable in targeting a 4.5p a quarter yield, which is a 9% yield on the issue price of 200p. So that will seem quite good. So people were quite happy to give them more money after that. So they raised some more money in a C share, bought 4 more A380s. So again, so now they've got 7. The leases are all set up so they will run for 10 years, but they could be extended for 2 years. So the sort of periods for these all ended between October 23 and November this year. And the way that the structure was done, the income would pay down the debt. So you pay the interest and also amortize the loan as well. So there'd be no debt left by the end of the lease life. And actually, this fund has no debt at all now. So it was all going very well, apart from when we got hit by COVID. Obviously, the planes couldn't fly. People start to worry about whether airlines are going to go bust or not. And Medio Air 4, which is like a sister fund to it, had real problems because Thai did go bust. Thai Airways did go bust. All of Emirates A380s were grounded. It was still flying its 777s, but the A380s weren't moving at all. It could have run into real trouble, but the Dubai government stepped in and backed it. But even before this happened, people are starting to say, oh, the A380s don't really make a lot of sense from an airline's point of view. They're not really profitable enough. Unless you can fill them, they don't really work. And you need specialist terminal facilities to handle them and all that sort of stuff. So there was no real secondary market developing in the planes. And people were looking at these thinking, well, actually, we're getting to the end of these lease lives now. And if we can't sell the planes, then a big chunk of the money that we were expecting to get from these things is going to disappear. So the board totally slashed the NAV. Basically, they took a big haircut to the end value of the planes, and that reduced the NAV. And then things sort of came back again, but even in March last year, 3 of the aircraft are still in temporary storage. The only good bit of news was they picked the right airline to partner with here. If they'd gone for Qantas or something, they would have been in real trouble. But Emirates said, we want to keep these things flying. They do work for us. So we're going to extend them for at least kind of 6 to 10 years beyond the end of these lease lives. And it kept on paying the dividend, the income to pay the dividends. So the dividends kept coming on this fund. But when you get to the end of the lease, because of this setup, the only real buyer in town was Emirates. So they paid $35 million for the first one and the second one, which I think is really quite cheap. You remember they paid 200, they were 243 million new, and they're only 10 years old. With that money, Doric Nimrod redeemed 2/7 of all of the shares in issue at 120p. But Emirates said we're going to start to retrofit all these aircraft with new premium economy products. So we're definitely going to use them. What we said about extend their lives is definitely true. We're going to do that. So by the time we get round to negotiating the price for the last lot of planes, they got a bit more for them. So they got $40 million ago. So $200 million is flying back to the company. So the debt's already gone. There's a bit of cash in there already. They're going to give most of that money out in the first quarter of next year, and they'll liquidate the fund quite soon after that. So actually, although it's been a rocky ride, it's actually been not a bad investment. So you paid 200p, you've had 224p back in dividends already, and I think we're going to make another 4.5p. You've had 57p equivalent on the first redemption, and I think you might get another 140 back next year based on how much cash there is and how much the liquidation expenses are. So that's a bit dubious. But against that, they're trading at about that price now. So there's not a lot of upside. I think even though it's paying more for these planes, Emirates are probably getting a bargain. You'd think, you look at this and you look at the jump that DNA2 they've had and said, is there an opportunity elsewhere? DNA3's share price has already moved, so you've missed out on that one, and it's trading a whopping great premium. So basically, it's what's built into that share price is that you're getting these enormous dividends coming back, and so yeah, that's kind of eroding capital value at the same time. So you get the sort of playoff between those two. I definitely wouldn't be buying into DNA3. The more interesting one might be a Medio Air 4, but that's complicated because of what's going on with Thai and everything else, and I'm not going to go into that here. We haven't got time really. But if there's one that's worth a look, it might be that one because that's still a big discount. Talking things on big discounts, Harmony Energy Income, almost 50 discount, only 110 million market cap. The reason it's not a big discount is because it's not paying any dividends. And the reason it's not paying dividends is because its profitability was nowhere near what it expected to be. They've announced this week the sort of quarter figures for the end of June. They've got some stuff that's still under construction, but they're saying that's almost done and they will be operational by end of September, they think. Some of this is down to contractor delays, so they're going to try and get some compensation out of contractors. I don't think it's going to be normal amounts of money, but we'll wait and see on that. The revenue's been a bit all over the place, so that the way that they quote it always is in terms of what the annualized revenue would be based on the income from that period, whatever period they're looking at. So they're saying if you analyze the revenue they got in the 3 months of the 30th of June, it would have been £45 a megawatt. That's a bit down on what they were getting. And it's really down to the spreads that they can capture between the price for electricity when there's a lot of electricity being generated and the price for electricity when the renewables, the sun's not shining and the wind's not blowing and the renewables aren't generating, and you get these sort of big fluctuations. And if you can trade that using the batteries, then you can make a profit. Those spreads were much narrower in June and again in July, I think. But really between the lines there. But August seems to have picked up a bit, so that's helpful. It's still not enough, really. So it's no surprise that they're ploughing ahead with selling the assets. And the interesting thing here is that they are saying that they think they're going to get non-binding offers before the end of September. Now you go back to that discount, 50%. To me, that says there might be sizable upside here. I mean, I can't guarantee that. We've got actually no way of knowing what people are going to bid first batteries because the revenue hasn't been anything like what was predicted. Obviously, they've brought the NAV down because to reflect that, but still, it's still way up here and the share price is down there. Nevertheless, I think if they do get bids, they're probably going to come in well ahead of the current share price. We'll just have to wait and see. So that is enough from me.